Hi, my name is Ian Chiu. I'm a managing director here at Owl Ventures, which is a education technology focused venture capital fund managing a little bit over $1.2 billion. I'm pleased to have Rukaiyah Adams here, the Chief Investment Officer at Meyer Memorial Trust for this Tide 10. Rukaiyah, you and I have known each other for quite a long time since our days in business school. Maybe tell folks a little bit about yourself and how you found your way to being the CIO at Meyer Memorial Trust.
Hey, Ian, it's nice to see you. My name's Rukaiyah. I work at Meyer Memorial Trust, which is one of the largest foundations in the Pacific Northwest. We have a policy of giving away as much money as possible. So as soon as my assets grow, we disperse the wealth into the community. Right now, we're a little more than $1 billion, and over the last 15 years have given away $1 billion. So the objective of our investment strategy and pool is to not actually grow the pool, but to grow it in order to share it. I also chair the Oregon Investment Council that manages $100 billion. So I see the whole range of investing, from the very large scale pension fund accounts to some of the smaller family offices and high net worth offices in the state. I sit on a few investment boards. So I feel like I'm one of those rare people who sees the full spectrum of investing and risk. I came into investing indirectly. It was a change in career. I was an M&A lawyer for a decade, mostly at Skadden Arps. So I was in investing, but from the advisory side, not from the principal side. And after a decade of that, I thought that my temperament was more executive than advisory. And I wanted to be able to set the agenda and drive outcomes and not just serve transactions or other people's visions. So I made the switch in careers. I didn't expect to go into investing or investment management. We do a little bit of both. I thought I'd leave business school and go into private equity, but when we graduated from business school, there was a downturn and I struggled to find work. And the opportunity that I found was at an asset management business, and sort of took me in a different direction in my career. But my soul is still a deal soul, and I miss the deal days. But right now, I sit atop of these giant pools of capital, and my job is to allocate big chunks of it. And I love it. I absolutely love the work.
And maybe just share a little bit about some of the investment trends that you think about and that you're excited about. And I think the role of Meyer and just your passion for transforming society, would be interested to just kind of hear what you're thinking about these days.
Yeah, so thinking a lot about the purpose of capital as we struggle with capitalism's role in society, and how we're seeing real divergence in income and wealth and the consequences of that playing out in society as we've seen in the United States. But I'm really thinking deeply about the role that capital plays in creating some of those problems and worsening those problems, and leaning toward thinking that capital has a moral responsibility to serve humanity. And that's different. I'm not saying that the people who manage capital have responsibilities. I'm actually thinking that the capital itself it holds some moral purpose. And that's really changing how I invest. And the other thing that the other things that I'm thinking a lot about right now are AI, and the ways that we think of AI as kind of science and science fiction, but what we're seeing in investing is AI is changing our measure of human productivity. And that sounds kind of ethereal and abstract, but productivity is a baseline input in almost all parts of our economy. Our treasury rates are based on productivity, and forecasts are based on productivity and fertility. Your insurance rates are based on productivity. There are all these baseline economic factors that are based on that. And as AI intrudes into the human supply chain and workforce, we're actually really, really changing some of the fundamental inputs into our system. And so I'm thinking a lot about that, because we invest in 20 or 50-year horizons. And we see AI really disrupting what is labor, one, what is productivity, two, and whether or not we need as many humans as we do to generate the economic activity that sustains our economy. So that right now is what I'm really, really thinking about.
Yeah, it's a really, really important topic right now, and we actually just made an investment as well in a company focused on that, exactly around AI and AI learning and skilling and upskilling. Company called Workera. So that's definitely timely and I think relevant in particular because it cuts across so many industries as well, as you talked about, right? There's applications around energy, around biology, around science, certainly around just, enterprise broadly, as well. So,
Yeah.
So oh,
But
sorry, go ahead.
I'll tell you so I think with my business school classmates, we kind of think at that level. But one of the interesting things about being in an endowment and foundation managing money is that those businesses sit at the intersection of Wall Street and Main Street. So we see AI as an opportunity to scale and to become more efficient on the business side. But I also see the human consequences on the Main Street side, right, which is labor force disruption, the need for workforce retraining. We see some fertility consequences. There are a bunch of real life consequences to AI innovation. Right. And so the people in my role have to begin to articulate, to challenge us to think about the consequences of using AI to optimize enterprise value, because there are some real life consequences to that.
Right. Yeah, I think it touches on the equity elements, distribution of opportunity. So that's definitely it's definitely very timely right now. And I think, 2020. We're sitting here now in 2021, and 2020 was certainly a year, right? And for us, globally, and then also in the U.S. for a number of reasons. Maybe just talk a little bit about how 2020 impacted Meyer. Did it have an effect on how you thought about your strategy at all, or how you actually executed on your strategy on a day-to-day basis, and then also just longer term, how you thought about your approach to investing?
Yeah, 2020 did impact us. From a financial standpoint, it was an excellent year, as was 2019. In 2019, we had the second highest performing endowment in the country, and I think we'll be pretty close to the top in 2020. Mostly because we understood that in the liquid markets, there are really relatively few companies that drive the upside of liquid markets. So we all know that now, but Meyer's been in those kinds of strategies for the better part of 3 decades, and they began to really pay off for us. So we're highly concentrated in basically the growth equity that typical investors avoid concentration in, but because I had a high conviction in those strategies, they started to really pay off in 19 and 20. So our endowment was typical of wealthy, equitized wealth that just had a massive run in 2020. While Main Street was struggling with jobs and our real economy, our portfolio just shot the lights out. So we've seen that play out. What it's made me think deeply about is, if it's true that in the liquid markets, relatively few growth-based companies drive the upside of most of our portfolios, then I'm thinking, well, how can I reach down into the private markets to find those companies, not at the early stage because there's a lot of risk and uncertainty there, but in the late stage? Can we be the investors that bridge the transition from pure private markets to listed markets? Why would I wait for those companies to make it to the listed markets before we grab and hold them? So we're thinking through strategies for being not just bridge capital, but how we could actually hold assets through the private transition in the growth phase through the listed phase. Because I think the trend of having relatively few companies driving value will continue, and it will begin before IPO. IPOs are implemented. So that's what I'm thinking about right now, is how can an investor like me blow through the silos of listed and private assets, because those silos are fake. They're lazy thinking, right? It's just a proxy for risk allocation, and I wonder how I can reach in to find the good private companies and hold them for a very long time.
Got it. Yeah, and I mean, I think a part of that also is, just the relationships that you have, with funds and seeing what is out there and some of the activities. And we were honored, obviously, in 2020 to add Meyer and have your support, at Owl Ventures on the education side. Maybe can you talk a little bit about how you think about education as part of your strategy or portfolio, and how that kind of fits your mandate or mission?
So you and I have not had a chance to talk about what we are really thinking in education. So Meyer has four grant-making strategies, and education is one of them. And we struggle to find education assets to align our investment portfolio with our philanthropic purpose. So it took me a few years, but the strategy we've come up with is that in Oregon, there's a mountain range that divides the state. The west part of the state is considered coastal and coastal elitish. And the east part of the state kind of is a high desert and really takes on the culture of the middle part of the country. So it abuts Idaho and some of the high plateau Midwestern culture. So as a result, the politics, the education opportunity, all really divided by the mountain range. What we're finding in Eastern Oregon is that some kids are struggling with basic literacy.
Mm-hmm.
And that was made worse by the pandemic.
Mm.
So even before schools were disrupted and kids were accessing schools through the internet, we knew there was a problem, which is why we came looking for you. So we also invest in SpaceX. And one of the reasons why we've invested in SpaceX is not for rocket ships, but for the Starlink internet system that they are also developing in connection with space exploration. So SpaceX is the investment in SpaceX is funding the Starlink system that will create affordable broadband around the world at relatively low cost, right? Which gives us the platform for delivering education. But we'll need applications and programs and businesses that can snap on to global broadband to deliver education services to people around the world. So our strategy in thinking about our money having moral responsibility is we believe that children around the world should have access to high quality education. And the way that we will do that is through broadband and snap-on businesses. And our objective is not just to educate them, but to sort of unleash the economic. Can you imagine worldwide if kids in Ethiopia and India and Iceland and Eastern Oregon all have the same quality math education? Can you imagine the economic activity that will derive from widely distributed quality education? So that's what we're trying to do, is just unleash that. And we're doing that with early stage investing in broadband distribution. And then OWL fits right there in the middle, that we hope will help us with the distribution and quality education platforms. And then we're funding on the grant making side, the ground level. So the last mile of the people who are living, the teachers and the schools and community centers where those kids will access the education.
Yeah.
So that's one example of where we've said our money has moral responsibility, and we're going to pull the technology through to benefit humanity.
I love that. And it's funny, infrastructure has always been a big limiter historically, around educational access. And it's improved actually quite dramatically in the last 5 years, now that over 99% now of public schools in the US have access to broadband. That wasn't the case early part of the last decade. And I think your investments in SpaceX, and thank you for sharing that, will only help to accelerate that. In fact, I haven't had a chance to catch up with you and share with you. You mentioned Ethiopia and kids around the world. We actually just announced yesterday, our first investment in Africa, in a company called ULesson, based out of Nigeria, that is doing exactly this in terms of distributing educational content and learning. And they've had over 1 million downloads already, and the pandemic actually accelerated the adoption of that. And so, your comments are really timely, and these things are happening rapidly in real time, quite literally, and we're seeing that transformation take place. So it's exciting.
And on paper, people who don't know much about the investment industry might think the two of us play similar roles, and we don't. My job is to drive capital toward investment opportunities that will serve humanity at a scale that can actually transform supply chains and distribution chains. And brilliant people like you take that capital and actually turn it into, invest it in companies and grow those companies. But if the capital allocators are not moving what capital to strategies that really drive change, then we have problems.
Right.
And I think that capital allocators have been lazy.
Yeah.
And they've misunderstood risk. So we're really, really trying to think about what the role of the allocator is, and whether the capital itself can serve humanity, not just extract from humanity. But the education piece, I think it works, but we have to snap philanthropy onto the last piece of it.
Right.
So that's the other breakthrough, is that we can't think of capital as investment capital and charity, that they're actually one, and it's just a risk spectrum that each kind of capital plays a leadership role in.
Yeah, no, that makes a lot of sense. And I know Meyer has a huge focus on community and catalyzing community as well. And so, it's kind of a lot of what you talk about there. There's capital allocation and capital directed towards these activities. There's the company formation and activities that happen, and also the supply chain and infrastructure, as you talk about. What about community? Like, what kind of activities is Meyer doing in terms of catalyzing the community as well, to kind of be more involved and engaged in a lot of the things that you're talking about?
That's so interesting. So one of our 4 strategies, in addition to education, is what we call community building, and that a lot of that is leadership development, because we could do all this work with allocation and new business formation, and then it can get sent into a meat grinder in that last mile if the people on the ground don't have the community connections and leadership skills and networks to take the technology and actually deliver outcomes to people on the ground. So we spend most of our grant making money developing leaders, leadership networks, and giving them access to power. So let's say we get the internet infrastructure right, we plug into OWL, and then in Eastern Oregon, in a town like Madras, if the local county administrator doesn't have the connections to the state to get the broadband infrastructure that's necessary to use Starlink, then we have a problem. So that's what we're doing, is trying to empower and educate people and develop networks so that communities, particularly poor communities and communities of color, have the power to pull the resources of the state again to snap on to what we're doing. So yeah, that's a big part of it. It's pretty amazing to see it come to life, and to have just a few of us working on this and have it sort of play out. So I didn't tell you what our strategy was when we jumped at OWL, but now you know that we were looking for you for years.
Yeah, and it all fits together quite nicely what we're doing. So, international actually, I think is an element or an area that you think a lot about, just from our past conversations, and not just kind of a U.S. centric view of capital deployment. What are some of the trends that you're seeing there, and how do you sort of think about international playing a role in your portfolio?
Yeah, it's so fascinating that we often think about American capitalism as beginning with the colonial framework, the funding and financing of the slave trade and the exploration of the Americas. But it really predates that. And even before the Silk Road and before massive systems of trade and distribution were in place, humans have always really been investing in trading. So I think it's a sort of back to the future thinking. We became nationalistic in our capital relatively recently. I mean, even in the formation of the colonies, the money that funded the slave trade was actually global. It wasn't even just North American or European, it was actually global. So if you are open to the reality that the origins of American capital actually were global, then the moral responsibility that flows from it is also global. It should be in service to humanity. So I don't agree with the sort of America, the great American vision of deployment of capital. But with that, I'm in a state that is really deeply enmeshed with non-US trade. So in Oregon, our biggest trading partners are Korea, Japan, China.
Right.
And so just being here, we're like, you're engaged with the world. So I want those economies and the people who live there to be strong, because that means we'll trade with them. And our cultures are connected. A lot of people don't realize how influenced Oregon was with Japan, the steel industry, as they grew during the war times. The trade between Oregon and Japan was huge. I mean, they produced a lot of steel, and we produced the ships and all the things that drove the war machine. So we have this deep history in this part of the world, as engaging particularly with Asia. But I would say that it's really important to us to have vitality and economic growth that is widely distributed around the world, because it's better for all of us. But I also consider myself a citizen of the world, not necessarily, I mean, by nationality, I'm American, but I want all of us to do better. So I'm looking for opportunities all around the world, not just in the United States. I also think for the next decade, a lot of the growth opportunities will be in other parts of the world, which is scary to say. So, but more on that, and I'll say the one thing I'm seeing at the capital allocator level is that big chunks of investments are going to EM markets, and that's not just in growth assets or technology, but EM real estate. Lots of wealth moving there. We believe in the urbanization of EM markets, so there will be larger cities, and those cities will need REITs, and they'll need infrastructure. And so I can see that global capital allocation is signaling in a view that real big growth opportunities will be outside the United States, which is a little bit challenging. And we're seeing infrastructure investments where we're just capturing yield or cash flow. That's moving to European markets and North American markets, which tells me that value-based investing will be strong in the US and Europe, and growth opportunities throughout several asset classes will be in EM markets.
Right. Got it. And maybe just to close the discussion and conversation, what does diversity mean to you in investing, and how do you think about success in that domain?
Diversity is tough, especially when your portfolio is global, right? I feel like Americans have become a little bit imperialistic in our thinking about diversity and focusing so much on race. I mean, we have managers in Europe who have Turkish portfolio managers and people from China and Africa, and I'm certainly not going to ask them about their nationality, right, or their sexual orientation if we're investing in certain parts of the world. So what I try to do is find, in the US market, it clearly is defined by race and gender. Europe is more focused on gender, but what we're really trying to do is have a diversity of perspectives and invest in organizations that create opportunities for different kinds of people. So I try not to have labels on them, because we invest around the world. With that said, it's pretty clear that our capital organizations are not recruiting and promoting women of color anywhere in the world, even in places where women of color are in control of capital, right? With a few exceptions. Maybe Singapore is the exception, and maybe Nigeria. So although I don't have any specific targets, I am very sensitive to the promotion of women of color inside organizations around the world. I think we need diversity of thought and opportunity. It's just that simple.
Well, I mean, I think you're a fabulous role model for an example of success, along those lines. And certainly, you've led Meyer to just tremendous success, during your leadership time there. So thank you so much for your time on this and the discussion. I learned a lot, even though we talk, quite frequently already, but always new things that come out of our discussions. So.